All right. Well, Nadine, welcome. I'm so excited to have you here. We were just talking, and Nadine has lost her voice a little bit. So we're going to lean heavily on the
I was
mics.
not partying last night. Okay, so sorry.
So that's what she says. That's what she says. But you were out. You do have a little Rio connection, which I thought was interesting to just
I
get
did. I
started.
have family on both sides of my mom and dad, so it was nice to reconnect with family.
Yeah. So a lot of reasons to be here. But I'm excited that you're here because you have such an interesting perspective, such an interesting background of how you have navigated and been on this journey of merging and converging of the digital world and the traditional world. So let's just start with DTCC, which is where you are currently. There are a lot of acronyms in this world. Not everyone knows what that is. So can you just give us the elevator pitch of what is it and what do you do there?
Absolutely. Does anybody know what DTCC is? All right, that's the most I've ever gotten. Thank you. So it is the Depository Trust Corporation, and DTCC is actually the sole provider of post-trade infrastructure in the United States. So we're the only CSD there. We settle about $4 quadrillion in trades every year. Okay, another question. Does anybody know how many zeros are there in a quadrillion?
I was just trying to think about that.
15. I had to look it up. And we actually came to existence about 50 years ago when Wall Street had what was today known as the paperwork crisis. So if you remember, in the old days, they used to use bike messengers to move securities between different firms on Wall Street. The firms got together when trading took off. They just couldn't keep up anymore, and hence CTCC was created. I usually like to say we were the original atomic settlement mechanism, albeit an old-fashioned way. We do a lot of clearing. We are also a clearer, so there is always a buyer for every sale and a seller for every buy. Um, and um, and we are owned and governed by our participants, which is a really important factor because all the work that we're doing in this space is actually being done with the market for the market, and that's how we're trying to move things forward. Look at this, even my voice is clearing.
Yeah, look at that. So is it fair to say that's pretty much the backbone of the US financial system?
It is. We every single equity trade that's done in the U.S. market or if a repo trade is actually settled, cleared, and custodied by DTCC. So we're at
So that's about as TradFi as you get. But they have you, and your background started very traditionally in TradFi, but you have evolved and brought a lot of blockchain knowledge. So can you just explain a little bit about how your most recent company, Securrency, which some of us, it's a household name here in the Stellar ecosystem, but how you went from Securrency to DTCC?
I'm actually the primary, I'm the poster child that you can actually teach an elephant how to dance. I've worked all my life in custody banks, so my career has spanned working for the likes of the Bank of New York and State Street, with a small stunt at a fund manager in between. And when I was at State Street, I was running global markets, all our trading and our trading and capabilities, and we actually stumbled on a firm called Securrency. And I fell in love with their vision, their technology, and my timing wasn't great. Okay, I moved over in 2023, and so we had while the technology was great, we had phenomenal partners like Stellar, Wisdom Tree, and others that we worked with. Um, it very quickly dawned on me that if we wanted to execute on the aspirations that we had to really change and evolve the U.S. markets to make them totally digital, totally tokenized, we were not going to be able to do it as a standalone fintech company. It would have been impossible, no matter how much money we would raise and who would we partner with. So we had conversations with DTCC, and honestly, not in my wildest dreams that I think at the time they would be interested. But I got to give the CEO, Frank Lasella, and the DTCC board a lot of credit for the courage and foresight that they displayed. And we entered into a transaction towards the end of 23. The team and I, the entire team, moved over to DTCC, and we created DTCC Digital Assets. Again, not paid a lot of marketing dollars for that, but it says exactly what it says on the tin there. And we have been forging our path ahead to try to modernize and tokenize U.S. markets.
Yeah, well, and I need to double click a little because we're at a stellar event, which is so Securrency. From my experience, I started 6 years ago, and they were already an OG in the Stellar ecosystem. And to me, they were both from both the technology and as the chief policy officer from the engagement with regulators. They were really pioneers, not just for the Stellar ecosystem, but for the blockchain industry writ large. So I'm just curious from your point of view, like how much of those pieces played into both your interest in joining Securrency and then this vision that you just explained about Securrency. To really make this scale, we need to be not a fintech and look at DTCC.
Yeah, we need it. We are so fintech in our core, but fully engaged in market infrastructure. And you're spot on. It was Securrency's view on compliance first that was very attractive to the likes of Stellar as well as to DTCC. Also, the ability of partnering with the likes of Stellar to create some of the functionality that eventually the SEC took great comfort in authorizing the I'm not going to say the first, but among the first 40 Act funds that actually tokenized and moved on chain. So that was very critical. The second component too is the team at Security also fully understood that it's going to be really hard to ask any financial institution to throw away billions of dollars that they have invested over the decades and just jump on new technology. Like that, we knew it wasn't going to happen. So we spent a fair amount of time trying to bridge the old and the new. And I was telling Candace earlier, I used to use the analogies of bringing the Flintstones and the Jetsons together. But I've also realized that the audience is growing younger and most people don't have a clue what I was talking about. So it is
I
really
was
bringing,
following.
it was bringing the old and the new together. But all these attributes really piqued the interest of Stellar, who also was an early investor in Securrency. That's important to note. That partnership was really strong and helped us develop all the attributes that eventually not only were attractive to DTCC, but for the market at large. Everything that we're doing today is solely built on the Securrency technology that got converted to DTCC on close.
Yeah. And one of the for those of you who are building in Stellar, clawback functionality, thank you, Securrency. And in keeping with how we like to operate and build, it's open source, so it's being used across the markets. So I guess that to me sort of shifts into, you recently said, I'm going to quote what you posted last week. DTTC is architecting a future where traditional and digital systems operate in harmony. And to me, that screams kind of what Danelle was talking about earlier, and this architecting and being very deliberate in building and thinking about that need for interoperability and the technology being able to be used. I mean, as she said, also like everyone's building a layer one. What does that future look like as you're having to bridge these two worlds and help shepherd in this new technology? What does that architecture look like? And
We're committed to we're committed to the principles that everybody in this room is committed to. It's got to be open. It's got to be interconnected. It's got to be interoperable. But we also need to add to it, it's got to be scalable, resilient. And those are important hallmarks for a financial market infrastructure like DTCC. So our approach has been very deliberate. And we have been working, we can't do it alone. We know that it will take a village. It will take everybody in this room and at this conference, among others, to be able to convert to US markets to a tokenized, fully 24/7 atomic environment. But that will take a while. It took us 15 years to get to where we are today. So a bit of patience as we're working through with the markets to get there. I would say since November of 2024, we have definitely seen the market shift a little bit more impatience from institutional investors, and that's good. A lot they're leaning in, which is good. And we will continue to do that. So we built something called Launchpad in order to foster innovation in the US markets, give people access not just to our technology, but to the technology of other partners. again, the likes of Stellar and Chainlink and Onera and others and Fireblocks have been working with us to be able to help U.S. institutions just imagine the art of the possible. Because a lot of people are just sitting there going, okay, this is so big. Where do I start? And you just got to start one step at a time and using firms like TTCC and Stellar and others to help with that innovation. So that's what we mean by that. We also, as I said earlier, we know it's not all going to flip on one end. So we do need to exert the same level of diligence and care for digital assets as we do with traditional assets, because that's important. It's important to be able to aggregate liquidity. It's important to be able to aggregate reporting. And if we just go in different directions, it's going to be almost impossible to do that.
Yeah, so you mentioned Launchpad, and I know you've been tokenizing collateral management. What are you learning from those? They're really, is it fair to call those kind of pilots and or do you feel like they're ready and they just need to start scaling? And what have you been
Yeah, we're done with
learning?
pilots. I hope the whole industry
Yay, no more
pilots, right? No more
pilots.
pilots. It is really time to really put our efforts where they need to be and push forward. We did something called, and again, no marketing dollars were spent on this. The Great Collateral Experiment. We did that in April, but what we wanted to show is the discussion of whether the technology is ready or not. That's behind us. We know the technology is there. We know the regulation actually has moved fairly forward in a way that we're comfortable we can operate at least real world assets within the regulatory framework that we have. We wanted to show that real world assets and crypto assets can actually coexist in the same platforms. We wanted to show that you can move collateral at the speed of the network um, by leveraging anything from stablecoins to tokenized money market funds to synthetic CBDCs as collateral. We simulated real live events. We did a default. Any of you that was around when Lehman went belly up, we're still trying to collect revenues, the assets that were left behind. We showed that we could recover within minutes. We showed that you can increase operational efficiencies. Um, all that was real, alive code that we showed. It wasn't a POC. The reason we haven't deployed right now is because none of us ever in our wildest dreams thought that we could put $100 trillion of assets on our platforms. And right now we're really busy hardening the platform, ensuring that it's scalable and secure before we release it next year. And it's a platform really designed to aggregate the industry and get it to come to one place. Like the one, if you remember my introduction, we're the sole provider of post-trade infrastructure in the US. But with digital technology, what we've seen is a proliferation in a um, in of platforms emerging throughout, which has made it very difficult to have one common platform where people can actually deploy their products, service their clients, and actually have trust to meet each other there. So that's what it's designed to do. We're not doing collateral management, to be very clear. We're just offering the platform and the smart contracts for people to be able to move. It reduces cost, it reduces risk, and it's going to bring the industry together. At least that's the feedback we're getting from the people that actually participated in the experiment back in April.
And so you are clearly very innovative yourself. Like your journey, can you tell a little bit? Sorry, I'm taking a little aside, but this, like, you're working in an industry. I'm thinking about what you're talking about and wondering, is everyone else in the industry actually ready for that? But before we talk about the industry players, I just want to pause and ask you on a more personal level, like what has surprised you in this journey that you've been on from, I mean, you were at BNY Mellon, right? And now here you are talking
You
about,
say like it's
it's
amazing.
just, it's not a bad thing. It's just a very different place than where you are right now. So I'm just curious when you, sometimes we all forget to stop and pause and take a beat and look at that. So I want to give you that opportunity with all of our friends here.
No, I appreciate that. But it's really the experience that I derived at BNY and at State Street that actually made this journey worthwhile. I was pleasantly surprised of, and really pleasantly surprised how innovative it could be, how much learning one can get. I when I joined Securrency, and I see Patrick in the room here, he can attest that I can barely turn my iPhone on. But I went through a journey of learning more about the technology, learning why this was good. And my experience at BNY and at State Street taught me market infrastructure. And the ability of having that and then joining it with the goodness of this technology is what allowed us to say we can do things better, we can do things more efficiently. And it's no secret, most of the banks, a lot of our P&L, my lifestyle was funded by, exploiting the inefficiencies in the market, right? But we knew where those inefficiencies are. We also know that the technology today will help us get there, and make it more affordable, more available to people worldwide, which is also a stellar mission to make, to address the unbankables, to make finance more democratic. And there's a big pie out there. We can slice it in a way where more people can benefit from that. And but you can't do that if you don't understand where the bodies are buried. You don't understand how the inefficiencies are, and now leveraging this technology to do that. And I'll tell you, whether it's BNY, it's State Street, all the banks are on board right now because they also understand that it's impossible to continue to grow and innovate if you can't modernize your infrastructure while you're doing this. And we've got a once in a lifetime opportunity to do it, and it's very exciting.
Yeah, it's very exciting. And I feel like there is this excitement right now. There's almost this frenzy of everyone wanting to get in, and some folks have been really holding back, and some have been leaning in. From your experience, which is, I mean, I don't know who would have a better point of view on this, to ask this question, which is, what do we look at now and to see which are the firms and the institutions that are going to experiment in blockchain and fall off, and which, like, what are the things that we should be looking for those who you think are going to actually embrace blockchain and transform the way they do business?
That's a great question, and regardless of where anybody is in the cycle, I think it's time to lean in, and get engaged. Listen, not everybody's going to be successful. That's what, it is. Some people will do it well and succeed, and some won't. But people need to do it for all the right reasons. What we're seeing is a lot of people engaging also because of the fear of missing out. I mean, I can't tell you how many calls I get going, "Can you guys help us tokenize a money market?" And I'm like, "Sure." "Why do you want to do it?" "Well, BlackRock is doing it, Vanguard is doing it, Franklin Templeton." I'm like, "Yeah, but dude, you're not Franklin Templeton, you're not BlackRock. Why do you want to do it?" It's like, my board asked me about it, right? So it's really important for people. The technology is important, but we've done the heavy lifting, and I mean the collective we in the industry. We've done the heavy lifting on the technology. I think the hardest part right now is figuring out your North Star, figuring out why, and are you willing to disrupt your operating model, your commercial model, your distribution model, for promises of what this technology is going to deliver. And frankly, it's hard. It's hard to give up a steady paycheck, right? Whether it's client revenues, it's technology that and take a jump. But dip your toe in. There's different ways that people can experiment. But it's really important to have the purpose and the vision of why you're doing this. And I think everything from there will fall apart, will fall together, because one of the other pleasant surprises is this community is so supportive, is so collaborative. Yes, we compete on certain areas, but there's a common thread that gathers all of us, which is really to see this vision of a tokenized world, 24/7 atomic settlement, being fair and open to all. I think that binds us, and I think if anybody needs help, we're all here. Whether it's DTCC, it's Stellar, I'm sure any of your firms will be willing to step up and help, in order to move for the common good. So,
Yeah, and I think that even just hearing that, I think, we were talking backstage a little bit, and, like, there is, even if all of the technology hasn't been integrated, I think even that way of speaking about that collaborative, nature of figuring out how we move forward together. There's not one chain that's gonna win them all. There's not one way of doing things that's gonna it's like, how do we interoperate and work together and do find what's in the greater good, as you said. But, in our less than a minute, for those who are sitting on the sidelines in this, evolution, as it's not an overnight thing, what do you have to say?
all right, your time is up, guys. Like, just get in there. The water feels good. Dip your toes in and get going. This technology is moving too fast. Like, I've worked in institutions all my life where I was told there's no benefit in being a first mover. We just want to be a quick follower, and there's some merit in that. but the time now has come to be a follower. The technology is moving too fast. Like, if you sit by the sideline for any longer, it's gonna be really hard to catch up. Just get in there. Again, the water's really good, and I think you'll enjoy the ride. So, please reach out if there's anything we could do to help you guys on your digital journey. Thank
Awesome. Yes. Thank you so much, Nadine. It's so great to have you.
you very
And good job on your voice. Good work.